Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Exchange in Miami. Joining me for this segment, we have Rene Casis. He's Head of Portfolio Solutions at American Century. We're going to discuss an ETF that seeks to provide short duration strategic income. It is great to have you with us, Rene. Welcome to TradeTalks.
Thank you, Jill. Thanks for having me.
Of course, we have to kick it off with the macro, and everyone wants to know what's going to happen with the Fed. What are your thoughts in terms of rate cuts?
Sure. So what we're seeing here is right now, if we take a step back on where we're seeing the economic environment, we are seeing a 90% probability that we're going to see an economic growth slowdown. So, we see that savings have held up the U.S. consumers for much longer than we would have expected, and much of what the market has expected. But we are seeing signs that savings are dissipating. And then as a result, we'll start to see consumer spending fall. We'll start to see higher borrowing costs will start to restrict spending. We're also seeing some signs of that in some areas. And as a result, with consumer spending less, we expect that business revenues will go down, layoffs will ensue. And as a result, in that backdrop, we do see U.S. Treasury yields starting to lower, credit spreads starting to widen, and then this should eventually lead the Fed to lower interest rates. Now, what we see that the market is expecting 5 to 6 cuts. We're probably seeing that, we're probably thinking that's a little too soon. So basically with March off of the table, we're seeing more like 3 to 4 cuts, and really starting to see that cycle start in the middle of the year around June.
Yeah, I mean the CPI print this morning certainly kind of solidified the March cut thesis there.
Yes.
Would you say yield is still attractive at this point then?
Yes, I mean we are seeing the 10-year at over 10%, and so we are seeing some upside opportunities there. We think that duration and carry could lead to attractive return profiles, and so what we've done is we have a set of ETFs that focuses on income, but at different duration points. So we can go anywhere between 0, short, intermediate, and that ultimately gives our clients choice and investors choice in sort of where they want to capture that income and at the right duration point.
10-year over 4% again.
Yes.
That's okay, I thought you said 10%. I was like,
sorry, no, did I say that? Sorry, it's 10-year.
That's interesting.
Yes.
Let's talk about the suite of income generating funds at American Century.
Yes. Yeah, so what we've created here is, so we have the same team, so same people, same philosophy, the same approach and process, and ultimately looking at both stock selection, but also transcending across multiple sectors. So we have the ability to access corporates, emerging markets, securitized debt, and then coupled with the security selection, we think that we can add value through that, and as well as attractive income to clients.
Let's talk about the ETF I referenced at the top of this, SDSI.
SDSI, yes. That's our short duration strategic income, ticker SDSI, listed on the Nasdaq. That fund right now sits at a 6% yield, 2-year duration, break even around 300 basis points. We think that with the inverted yield curve at the moment, that it's a good opportunity for investors to capture income. We think this will add value through this period. We will start to see though that until the rate cuts happen, SDI is a good place to be given this current.
Where do you think it fits in an investor portfolio? Is that part of that 60-40 model, or whatever the ratio is, kind of fit it into that income part of the 40?
Yeah, so the way we think, interesting question, because we are at American Century, we are doing a lot of work within model portfolios. We probably think about it less as in a 60-40, but really trying to think about what kind of outcome that investors are trying to achieve. So we see investors trying to reduce risk, we see investors trying to enhance income, and so where we see SDSI fitting really well is the ability to access, again, security selection, but also access that across multiple different types of fixed income sectors. And so, we do see this as a way to be a core allocation, but it could also be a strategic one as well. It really sort of depends on where the investor wants to and how they want to use this product. Income being a main focus of that, I think is going to be helpful in this current environment and helpful for any fixed income allocation.
All right, Rene, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Exchange. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.